Hey guys, today's Thursday, January the 18th of 2024, and I want to go over natural gas. And this is going to be an interesting, educational, fun video. We're going to be forecasting using different techniques for natural gas for the month of February, March, and April. So we're going to be back testing some things. We're going to do it in real time, as natural gas moves forward into the future, and we're going to be testing some things. So I wanted to kind of get a snapshot, and it's starting the forecast from today on. So everything you're going to see in this video is going to be all the techniques and different techniques, and the ones I kind of cover and watch and research. I'm not going to cover everything, like other cycle techniques and other things. I'm just going to cover what, because it's just too much to overtake. So I'm going to use some of the tools I have, and I just want to see what works, what doesn't work, what has an edge, and what doesn't have an edge. So without any further delay, let's get into it. So we're starting off from the January 17, and we're going to see what tools forecast, and it's forward looking. So the tools I'm using are kind of already set in stone. They're telling you what could be the probability of what could play out. So it's not going to change. And once, price catches to time, then we'll know what works and what doesn't work. So I just want to kind of get start out the video with a backdrop and see what's happening on the 18th with natural gas. And you can see it looks like an inside candle. Looks over here like a failed new high. We went as high as, a 296, and now nasty pullback coming in. So the high was here. So it tested the high on the US session on the 17th. This is the overnight, and it's just pushing back. Took out 286, which was the line in the sand for today only. Never reached the midpoint, which is the weekly chart of 304, and fail this big level here, the swing, and with that. So with that backdrop, now we could kind of go forward. So now from here, the question I asked you, are we going lower? What are the probabilities and what the cycles and the forecast and the seasonality and the Dewey and the Elliott wave and who knows what else out there technique wise? What do you think nat gas is going? And you could, let's throw in I'm not going to do, an analysis on the weather and all that. You could do whatever you want with the weather. I'm not including weather. I know it's cold. I know here in the US is cold. And this is not even factoring in the stuff that's going on in the Middle East and the Red Sea and, supply and demand and the chaos. That's not factoring none of that in. It's just pretty much what the cycles, pretty much the tools, seasonality, Gann theory, all these little things we're going to throw them in the melting pot and then see what worked out, what didn't, what had an edge, what nailed it. Like, wow, look at that. We didn't know, maybe one nails it, or maybe two, or maybe they all fail. Nothing worked. So let's get into it. We're going to start off with, measured moves. And using the measured move techniques from the past, there is a date you want to watch, or we're going to see if this is going to work out. And we don't know. This technique doesn't tell you what is it, a high or a low. It's just telling you the date to watch. And the one that we're watching here would be January the 25th. So that's a Thursday. So that's 6 here. And I'm taking that 6 from this high to this low. And these are trading days. So we're going to stick with trading days for now. And that was, and this is a daily chart. Yep. And these are closes. So that's 6 right there. We're going to put that in the future. That is going to be February the 12th. So that is our marker. This one is unknown. So this could be a low into February 12th and then shoot up. It could be a high into February 12th and go down. Or it could just go sideways February 12th, either, whatever happens, happens. February the 12th of this year, and That's 6. And then a 4 is from this high to this low. That indicates January the 25th. So those are your 2 dates, and see what this technique indicates. And this is pretty much measuring trading bars or closes, trading days pretty much, and the actual swing points. So that's our first one. Let's see what's going to play out there. Our second one is going to be, let's see. Boom. Elliott wave. I know there's a lot of Elliott wave guys, EW guys out there. So wave 4 is 276. So we should be hitting a wave 5 to finish a wave 5 pattern, and then see what happens there. So there's a couple of things here that we're going to include also, that it's just not Elliott wave. Some techniques and tools here. This one we can't count because this was the 16th. So in the future, there is one. This is the MOB technique. This one is looking or indicating, watch out for February the 5th. So this is written in stone. This is not going to change. February 5th, keep an eye on that. And this is leaning, and this is more for the upside. So if prices continue going higher, there's a probability there's a turning point on February 5th. I'm assuming that's a trading, calendar trading day, because it wouldn't show it here. The next one is to the downside will be February 9th, if it's going to push lower, and also February the 26th. So these are 2 dates to the downside. Prices go down, there's a probability that it could be a turning point here and here. So you have 2 there. This green line going like this is a seasonality. So this seasonality is indicating that there's a probability, if it plays out, that February the 13th or the 22nd could possibly be a swing low, and then it kind of, it looks like it gets a nice pop, but then it kind of goes sideways. But these are the 2 turning points, and that stays there too. So we got Elliott wave, and then, this is not more of a cycle, but yeah, it's predicting the future. So let's throw it in there. So the 19th and the 22nd, and you can say the 23rd, maybe more the 22nd and the 23rd. You could throw in the 19th because that's Friday, so it's like a Friday, Monday, Tuesday. This is the ellipse technique. This one doesn't tell you, what could it be, a high or low. It just indicates that high volatility is going to increase. So if it's like going high and we get around the 19, 20, 22, it could be a possible turning point. Or if it's going lower, it could be a possible turning point. And you can see on the seasonality around the 23rd, it's indicating that it's going to go down, and that from the 23rd is going to get this nice pop. So if this plays out, prices going lower and ignoring the wave 4 projection, not going to wave 5, then this could possibly play out, because this is going down and then increasing in volatility going up. This down here is a cycle, and I'm using a dominant cycle. So this is more of an experiment I'm testing. And I'm using the cycle of 76, which is a dominant cycle, using 2017 data to current prices. And this is a smaller cycle set. So I wanted to see if this is going to play out. So this cycle is pointing up, and it's saying a possible top somewhere around, you can say the week of the 15th, around there. So let's see how that's going to play out. Now let's go into our next one, which will be the Dewey cycle, mixed in with a few others that, I don't use, but I want to see how they play out. There's some that I use a lot. So the Gann swing is a technique of kind of keeping, you with the momentum and the trend. So as of right now, and I have an advanced one, and I have a regular one, I think is a 3-day. So both of them are up. So this indicates that the trend is still up. This could fluctuate, as you can see, going back and forth. And I overimposed it with the Dewey cycle on the bottom. And the white line is an average. The white projection line is an average of these Dewey cycles on the bottom. So we'll start off with the Gann swings. So the Gann swings are telling you prices are, have the potential of going higher, until the swing changes. So they're still pointing up while it's going down. The Dewey cycle average is pointing for a possible top on February the 1st, or turning point. And then from there, the white one, you see that it goes down into March the 4th. Now, this is using data. I couldn't get it for 2017. So I think this is 2019 data. So when I did 2014 data to current prices, it indicates the like around the 15th for a possible, turning point around the 12, around there. So I'm going to remember that, but this is the one I'm going to be using, the 2019 data. So the 2019 data tells you this is the high. The 2014 tells you it's around the 12 or 15, around there, where it kind of peaks and it turns. The yellow one is what we call mirror cycles. So it's mirroring cycles, and I'm pivoting from these two important. So the swing low here on December the 12th, and then I'm pivoting from the November 1st swing high on closed prices. So that's the purple. The purple is indicating somewhere around here where there could be a turning point, January the 29th, and then go down. So it's forecasting to go higher to January 29th, push down. The yellow one is the swing point from December the 12th here. Is projecting a high on January the 29th, and then pushing lower, getting a pop, and then pushing lower. The purple one kind of goes down sideways and then pushes lower into April the 1st. And you saw the Dewey cycle. And then these things, I've never used them, but I've heard of them. I just don't understand the theory behind it, but I'm just going to plot it in there just to see how it does. They call delta, and this is using a 4-month cycle. And the delta is smack, right here on January the 29th. So there's a lot of things with the mirror cycle lining up with the delta 4-month forecast of, January the 29th, which is a Monday. But the only thing is that the delta doesn't tell you that it's a high or a low. It's just a turning point. The mirror cycles are telling you, that it's probably going to, the probabilities are higher that it's going to go high and then turn down. The same thing with the Dewey cycle. And you can see here, this is an average of the Dewey cycles down here. So you can see that they're kind of getting toppy over here. And then they go down, and you see how they oscillate. And this one kind of, is the odd one. But that's the way the Dewey cycles work. And I think that's it. And these are, trading days. So the last one, we're going to go, let's see, I covered that. Yep. So the last one is going to be, I think, an exciting one. So let's go into that clip. Okay, so I almost forgot. There's the spectrum cycle analyzer I use also. And I had to set this up for this video clip. So I have, I'm not using we're not including the weeklies. We're just using the dailies. And I'm using 5 years of data. So within the 5 years of data, there's one cycle, which is a 256 cycle. And we're about to hit a trough around February the 16th. Now, the thing about the dynamic cycle is that they shift a little bit. So if they shift, I'm going to have to update it a little bit. But as of right now, I took a snapshot, and they are forecasting a possible low around February the 16th. Now, this one, I don't know what the 16 is. If it's a weekend, try to get it close to Friday or Monday. But the 256 cycle is forecasting a possible low or turning point from the February 16 of 2024. So let's get out of that. Let's close this one. The second one is, and that's why you see that it was red. The second one is a dominant cycle, which is 76. And that's the one I remember I was using on the Elliott wave chart. So this one is indicating a peak or a possible turning point around January the 28th. So remember, I don't know if that's on a weekend. So whatever day, Friday or Monday, get to that closer to those days. So if it's 20, if it's on a Saturday, it could be either a Friday, the 27th, or that Monday coming up. So that's what's that indicating, the 76 on that one. The next one will be a composite, which is both of them, the 256 and the 76. So there's a peak on January the 23rd, and then also there's a trough on March the 3rd. So this one is a composite of those two cycles, and it's indicating a possible turning point or a peak on the 23rd, and then down into the 3rd, which is this one over here, the 4th, around the 3rd or the 4th. So those are the two cycles merged together to create a composite. So let's go into the good stuff. Or, I guess they're all good. It's just, forecasting and backtesting and stuff like that. So this is what I call my master chart. And this one is spectrum analyzer, but using what they call an RPO, relative price oscillator or oscillation. So it's like a different algorithm or setting in regards to the spectrum analyzer. So this one is forecasting. So we'll go with the blue because I picked two. This is forecasting a possible swing low or turning point around, you could say, the week of the, February the 17th, somewhere around there. The red one is indicating somewhere around March the 13th. So those are those two turning points right there. I could create a composite of these two, but it's going to be somewhere around, February and March. So this one is just straight up, we're going down. No indication, of a possible, reversal or going higher. The next one is, this is more of a Gann technique. These are using planetary cycles, because Gann always looked at the heavens. So this is a technique that he would use or, factor in. And this one is indicating that we're going to go high. We're going to go all the way and maybe possibly peak out around March the 25th. So as you can see, it's not perfect, but it does kind of, get some nice swings. So if you were used to this, and I'm advocating not to just use an indicator, use whatever you use, manage risk. But this is a kind of, technique and theory that you will incorporate it with other things to use confirmation, following the trend and all that other stuff. So it looks like this could be a possible swing low or, turning point around the 21st of January. And pretty much the ultimate target would be March the 25th. So this is forecasting high. The next one is another cycle of one against techniques. And this one is showing a low around March, February, you could say the 11th, 10th, 11th, around there. And it could pop, and then another low on March the 27th. So those are the two dates on that one. Another cycle I'm using. So this one is kind of like the planetary cycle. This one peaks out somewhere around March the 13th, or a turning point around there, 14. But this one is kind of like the first one, that there's a turning point on February the 2nd, and then it goes up. So this one is bullish. So let's see how this is going to play out. And I have to always throw in the algos, the computer, because I always love the computer stuff. So the computer, this one is in the past. So this one already, it picked it out. Not that it knew it. It knew that there was a high on the January 12th high. But it doesn't know anything about the future. So it's forecasting a possible low around February the 19th, or turning point. And then it stalls out somewhere around April the 26th. So we got our date there. And, you know, and it'll oscillate, you know, back and forth, whatever, but it's targeting a high there or turning point. I've been using this lately as turning points or directional trading. So you can look at it like, okay, you know, nat gas could continue going high and then somewhere around the 19th stall, or it could just, you know, straight up go back low, test this low down here around the 19th and then shoot up higher. So that's how I look at it, but let's take it as directional for this one, but know that that's how I look at it both ways on that one. And also include a classic, which a lot of people know that know Gann theory and stuff like that, and in that kind of world, is the classical Bradley model. So the Bradley model is indicating something about, you know, there's a couple of dates, the 21st, the 28th, and that's a Sunday. So the 21st is a Sunday. So these are two Sundays. So think of it Monday. The cycle goes down. But the I think it's like the ultimate turning point would be the 25th, around there. So maybe go down or maybe go up, and then somewhere around the 25th, something happens where it's exhaustive, and then it turns, whatever direction that will be. So let's leave it open-minded there. But if you want to use it as a trend that, you know, you think is going to, you know, because look, if it's going down. And you can see that nat gas has just been going sideways higher. So you really can't use it as a trend. You could probably use it more as a turning point. So right here is a turning point and it was pointing down, but nat gas was going higher. So you see what I'm saying? You want to use it more like not directional. This is looking at it as like a turning point, like a cluster. And if you know a Bradley model, it's more like Gann stuff. And I think that's it. I don't want to make this video too long, but I wanted to make it simple, fun, so everybody could be like, okay. And if you want to leave your comments, what do you think? Are we going down or we're going higher? We already know the seasonality. I already covered that. You know, February, March, weak, low, and April, very strong. So that sums it up. I don't got to show you graphs. You've seen all my videos. So let me know your thoughts. What do you think? We're going higher? We're going lower? We're going sideways? That's a probability too. There's nothing happening. And not even factoring in the weather. I'm not even looking at that. I'm just looking at what the projection cycles and all these different techniques are forecasting. And then let's see who's the winner. You know, once we get to April and May, we could kind of have an idea what's already winning, what's already losing, what, you know, didn't work out, what worked out, and then we pick whatever the top 1, 2, or 3, or if there was a few that won, and then take it from there. I might do a poll. I just don't know how I'm going to do this. That way everybody's included. But if you want to leave your comments, you know, let me know. I'm going to sign out. Hopefully you like this video, and I'll keep you posted on my thoughts on natural gas.